Okay, we have a possible trade set up here in ORCL. If we look at the chart here, we can see that the stock, from reaching over $53 a share in September, has taken a big decline there over the past couple of weeks and is now trading down underneath $48 a share. As we can see from the RSI indicator here, the momentum indicator is showing that we are particularly oversold at present, down to about 20 on the RSI, and the slow stochastics also, the technicals also down here, very, very oversold at present. When these oversold conditions present themselves, I always go to the fundamentals to see if this stock is worthy of my attention. Now, what do I mean by the fundamentals? Well, here basically is the last 10 years financials from ORCL. So we can see it here line by line. We can see revenue, gross margin, operating income, all the way down. These probably are the most important key financial metrics that investors and traders use to get a gauge on how strong a moat this stock has. Now, what do I mean by this? Well, the way we trade is that if a trade goes against us, or if a position goes against us in the short term, then we need to be holding a stock that has strong competitive advantages, so it will be able to withstand selling, and over time value investors and smart money should be coming into the stock. That's why looking at the 10-year fundamentals of a stock, I think, is crucial when you want to get a long-term view of where this stock is headed. Now, if we look at the revenue, has increased from 22 billion to 38 over the last decade. Gross margins has actually increased also from 77 to 80. Operating income, operating margins are down a bit, and that's probably was the cause for concern over the past while. Origin has definitely been late with relation to migrating its customers to the cloud, and this has affected its financials, no doubt, in the short term. But as I always say to my subscribers, you have to look at stocks over a longer time period than just 1 or 2 years. Yes, its operating margin is down from the likes of 2013, where it almost reached 40%, and now we're at a trailing 12-month average of 33. So yes, its operating income has declined, probably about 2 billion from the heights of 2013, even though revenues are the same. What does this tell us? It tells us basically that in order to produce the same amount of income, the company at present is spending more. Now, is this a reason for this stock to enter a bear market? No, I don't think so. What happens is that the stock sells off over a period of time, and until it can get its financial house in order again and its margins increasing north. Now, if we look at, for example, if we go into the NASDAQ under ORCL and we look at its analyst research and see what consensus is saying with relation to how much growth this stock should be able to muster over the next 5 years or so, we can see that, look, like they're pretty substantial figures there. In fact, analysts believe that you're looking at an average annual rate of 9.8% earnings growth over the next 5 years. So that has to trickle into its margins over time. I've gone through the balance sheet of Oracle. It's got plenty of equity in relation to its long-term debt, plenty of earnings, pays a dividend, as we see here as well. You know, the dividend has actually increased from 5 cents a share back in 2009 all the way up to 68 cents a share at present on a trailing 12-month average. The payout ratio is only 29.6%. So, you know, these figures, along with the main pretense here, is that we need to be concentrating on stocks with strong competitive advantages. Apart from the figures that we show here over a 10-year period, Oracle range of customers, like people do not want to move away from Oracle because they're just so used to their software. This software has to be brought online onto the cloud. Oracle is behind with regard to that, behind the likes of Amazon and Microsoft. But, you know, I think over time it will, as we saw in its last quarter in its software as a solution segment, you know, it rose by something like 63%. I think that over time, Oracle should keep the vast amount of its customers, just basically because customers, you know, there's pretty strong switching costs there. And, you know, why do I say this? I say this because of its gross margin metrics, its net income metrics. If the fundamentals over a 10-year period, like look at its free cash flow, it's gone from 7 to 12 billion over a 10-year period. You know, there is nothing to say that the trend is not your friend here. Yes, there may be some short-term weakness, but at present, it looks like we have a pretty good setup here, especially if we look at its sentiment readings. Sentiment came all the way down to 12 on the 15th of September. Now that's the lowest it's been in a year. And that's how, you know, when you get, you know, situations like this, it usually means that buyers usually come in when sentiment is so weak in a quality stock like Oracle. I would be surprised if we didn't get some uplift here. So that's basically the fundamentals and sentiment out of the way. We have oversold momentum indicators. What about strategy? What's the best way to scale into a long position here? Well, depending on, here basically is a chart of Oracle's volatility, implied volatility at present. Now, we can see that we're at about 17.1% at present, which is pretty low, as I have the setting here at 1 year. So it's pretty low when we looking at this over the last 12 months. High enough to sell premium? Probably not. As you can see here, we're just after coming off earnings, as earnings always has very, very high implied volatility with respect to what range it has been trading in. So implied volatility got all the way up to nearly 27% a couple of weeks back when Oracle announced, and it's come back down now to 17%. So I wouldn't be recommending selling option premium here for options traders. What I would be recommending is maybe long debit spreads, maybe long poolman covered calls, which is basically the buying of a long-term option well in the money with a high delta, and then selling short out of the money call options every month on top of that. But anybody who has the capital I would be just basically buying here. You know, as we can see, sentiment, we're oversold. Momentum indicators, sentiment is down at the very tail end of its range, and this stock is not guaranteed, but this stock is expected to increase its earnings pretty substantially over the next 5 years. Just a quick word on valuation. At the moment, ORCL's PE ratio is 20.91. Now its long-term historic average is over 23. So even though the Nasdaq has been on a tear over the last few years, ORCL is still trading underneath its long-term historic average earnings multiple. So guys, I would be using this oversold pessimistic conditions to buy into a quality stock here. We should see some uplift over the near term.